Again, what a journey it's been. Here I am now, here I was then. I often think about this life we had. My friends with the days that passed, they are great all again. And for that, I have a story so sad. So much more. Because there was no time. One thing I know is love is by my side. Don't fight it, but don't fight it, yeah. Oh, that's over the goal. Down in the goal, the house there. Love is by my side, don't fight it. You cannot change something for yourself. And yes, we are then will be that way. I'm done sorry. Just good. If you feel that help or I'll be the just be great. Oh, yeah. Grateful for this, grateful like so much. Because there was no time.
Well, good morning, everybody. Happy Friday. All right, still getting a couple things set up here. Let's see what we got going on today. We did have a good sell-off in the overnight session, kind of a continuation of what we saw yesterday. Economic reports are going to be delayed. In the pre-market, I'm still monitoring the news. With the economic reports delayed, as we see down here, all of this information that usually gives us some pretty good trading opportunities in the morning, it creates a little additional volatility, is not there. Okay, so a lot of things coming out, more indictments, and the market does tend to, in observation, when we saw things come out about Lisa Cook at the Fed, every time they mentioned and started going after it, the markets dropped. Comey got indicted, markets dropped. We just have Bolton now indicted, supposed to give himself up. Markets dropped. Okay. So we're seeing a pattern that we need to kind of observe. That doesn't mean we'll have a trading opportunity. It just means that we are observant of the markets and just kind of seeing that this course of events of going on politically, along with the shutdown. Every time something comes out, it's like a win for the Republican side, I guess you could say. The markets have dropped. Okay, so be prepared. There has been a lot of mumbling out there, a lot of talking about buying the dips, buying the dips. And as soon as they start saying that, to me, that sounds just like the gold bugs coming out saying, hey, it's a good time to buy gold, get involved. And we've seen where gold is at. And speaking of gold, we'll start looking at some of those charts right away. Our we are expecting, let's see, let's go back over here. We have seen the dollar move up and along with the 10 and a 2-year yield, which is bringing some of our FX markets back down to demand areas. Okay. Aussie dollar did come back down. That one's looking a little shaky. We'll see how if we get any reaction off of the dollar to pull back. Okay. But Canadian dollar, I wanted to use this one as a good example because we see that price is trading with what we call is dead space, which is basically an area between resistance, a qualified resistance and a qualified support, meaning all the orders have been filled in here. So taking a long trade on that or taking a short trade inside of the dead space is much more elevated risk. So I wanted to use this as an example so that we can watch and observe that being aware of where not to make trades, but where we see a lot of traders kind of step in. Okay. Crude oil now making its move back down to demand. We'll look for that opportunity in just a few minutes. Let's see. And I did take an earlier trade on British pound and looking for that target. The first target here, where I expect price to change and start moving back up, okay, will be a little bit lower in demand. Okay, so just monitoring the US dollar along with the 10 and the 2-year yield. Another notable thing is we did see the VIX gap up almost $3, okay, in the pre-market. So the fear is getting much more elevated. So you keep hearing every time they say buy the dips, the fear goes down a little bit. Then jumps back up when the market drops and starts stopping those folks out, and then it comes back down. Okay. So what we're seeing is there's a lot of cracks in the system right now. If you're paying attention to the repo and reverse repo markets, there's not much there. And I think we just posted something in our Discord room about today, which was yesterday. The banks borrowed more from the Fed repo than they lent via the reverse repo for the first time since the pandemic. Okay, so there's a lot of cracks, just normal statistics, and resource is barchart.com, where I'm getting a lot of that information. But got to pay attention to those fundamentals. Okay. They may not give us a trade opportunity because we use the charts to time our way in and out of the markets. But, the more that they keep talking about these cracks that are happening, AI bubble, yada, yada, yada. Okay. It's happening. Credit crunch. I mean, all of these are things that create a bearish tone to the market. Okay, crude oil. Crude oil, we just have the 5-minute opening candle. Last trade date is October 21st, which would be on Tuesday next week. And we should be looking at the volume has already shifted to the December contract on crude oil. Okay, so we still only have a couple of days today being the contract rollover. Okay, so make note of that because crude oil and natural gas tend to have some very good, reliable trading patterns. Some very good, reliable trading patterns around contract rollover and last trade date. Okay. I'd like to reach out and say hello to everybody in YouTube or live stream this morning. Thanks for joining us. We will be doing a giveaway. Okay. So in today's session, we'll be doing a giveaway. That's right, 3 lucky traders. Okay, we'll get a $50,000 evaluation account from Elite Trader Funded. Okay, so if you've this is not a bad deal. The price is right. Okay. But we're going to have a little competition throughout the session. I'll be asking some questions, and the first and my team is monitoring the chat from Zoom and also managing the chat on the YouTube channel to who answers the question most quickly. Okay, so what we have today for a giveaway is three $50,000 evaluation accounts, compliments of Elite Trader Funding. And all you have to do is answer a simple question. Okay, the fastest person to drop the correct answer in wins. It's just as easy as that. The team will notify you and ask you for an email and take care of you on that end while I'm doing the live trading. Okay. So back to crude oil. Last trade date on the 21st, contract rollover today. So we'll see some little volatility on that. And we're just kind of seeing, I'm looking for price to come back down, test the low. I'm not really anxious to jump into the markets right now. I want to gather some information, see what's happening, mainly because the news out there, economic reports not being tested in low volatility, okay? Or low volume, increasing the volatility, okay? We got a lot of mixed stocks on the Dow. 30 volume is still on the light side, okay? Except for Nvidia, man, 7 million shares traded on that. Almost like there's like maybe computer trading going on that, okay? I mean, it's an expensive stock, $180, but to have 7 million, man. Hopefully they start using that crypto XRP to process orders. That would in the blockchain. Anyways, so what we have to be prepared for is right now we're at outside day on the S&P. Okay, just above the Globex high, we go back into a dead space. And if you've been observant of the dead space, you see that after it's been formed, 3 touches of resistance, 3 touches of support, that area in between, we call the dead space. Okay. Now, on about the 4th or 5th time that price goes through that, you start to see big, fast, sweeping moves to the downside and both back to the upside. Okay. Being that we don't have economic reports, something else is going to have to come out and we have to find an entry. But I would not downplay the possibility of a move back up. And if we get a move back up, we need to come back down to demand or find a way to splice into it. But as price starts to go through this dead space area, an area that most of the orders have been filled, okay, we have to look to the left and see that. So there is not much of any obstacles if price continues to move up. So don't get trapped on the other side thinking, oh, I'm bearish and keep trying to short. Okay. Market should be going down. Don't get trapped in that. Okay. Now there is potentially some more volatility. We are close to the 50-day moving average on a daily chart. Okay. The overnight session was the 3rd time price traded below the 50 moving average. And right now it's still looking to be above the 50, but if it starts trading back below that range, the market may turn a lot more bearish, okay, going into the weekend. So just things to be noted. Right now, I'm not looking at, I mean, most of my zones and places where I want to take a trade opportunity are a little bit further away, okay? When we look at the S&P futures being down about 6 points, we got 1, 2, 3, 4, 5 Dow stocks negative over 94 cents. And we have 7 that are, or 8 that are positive. 1, 2, 3, 4, 5. So that means 3 net positive. 3 times 2 would be 6, and we're now seeing that cash and futures are somewhat balanced. Now, that's another good odds enhancer that you can look at to say, you know what, there's not a lot to trade right now. And to be validated in making that comment is when cash, the stocks and futures are balanced. Our best trading opportunities are when futures are oversold or overbought relative to the cash market. Okay. Let's jump over to the NASDAQ. NASDAQ does have that dead space area, okay, that we need to be watching for. Upside, we do have a fair value gap on the other side of this range. We had some fantastic trades yesterday on the NASDAQ. I mean, unbelievable. 3 times got involved with that NASDAQ trade yesterday. Let me see if I can pull up a picture here. Now, still coming up. One thing I want to point out about this is I struggled to recreate this or go back and find it and find more of them. Okay. Now, if you look over to P&L, this is on 2 micros. 2 micros. Okay. And notice within the sell territory, there was a dead space over here. Okay. And this was the projected path that we were looking for the market to play out of this specific structure. Okay. There was a lot more to be made on this if I was willing to sit through, but this kind of got my feel good. Some of the techniques that we've been talking about and exploring and is the use of the candle range theory, whether the market is in accumulation or manipulation, and then of course the selling. So we've been using some stuff from Richard Wyckoff. Okay. Now, Richard Wyckoff, most of his information came from the early 1900s. Okay, I think he was born in 1887 and then traded up through the Great Depression or the 1929 area. Okay, there was multiple techniques going on with this. Okay, but the map was really important part of this. Now, going back and trying to find picture perfect past trade setup, because I want to know how these patterns are connected. Once this plays out, what's next after the markdown? Okay. Well, very often this is where the start of wave 1 is for the Elliott wave. Okay. Last night was the last night's trading session was wave 3. And now what we expect for wave 3 and 4 is more choppier market conditions. That's why I'm sharing some of this information and teaching a little bit. Okay. But I also wanted to point out it's not just one trading methodology and approach. It's a blend of using a lot of different pictures on the price chart and then using a way to apply the trades. And it all starts with identifying where is your demand, where is your supply areas. Skipping over here to the candle range time frame, okay? We still have about 43 minutes, okay, on each one of the indexes, the Dow, the NASDAQ, the Russell, and the S&P, okay? And what we're looking for is we have that big leg candle. We're looking for price to close inside of that leg candle. Then we would have the rally, the base, and potential drop, okay? Now look at the way that the market reversed. We had the drop, the base, and the rally, okay? So if you're using a higher time frame, like a 120-minute chart and such, you need to also step away from the chart just a little bit, open it up, and then look at the overall market structure. Okay, we got a high to low. We have, yeah, we're kind of going sideways, aren't we? And as we start mapping this, it's like we got a higher low, sorry, lower high, higher low, higher high, and now kind of at that decision point. Okay. So the markets on the 120-minute chart, market structure is more sideways and choppy. Okay. As far as the high time frame. So that tells me that we should be anticipating being more in the trading range. Okay. This also coincides with, we saw strong move down in the impulse. We might be looking for more of a correction. Now, correction, please don't interpret a correction as a reversal. Often corrections are just sideways base candles. Okay. Now, what that tells us about with the sideways base candles is the market is not trending, it's consolidating. Okay. Therefore, a defense mechanism or a change in strategy of looking for big market moves, okay, without a lot of news or economics to drive it, okay, is probably not going to happen. After an impulse, we go into correction. Now, managing expectations around corrections is you're basically buying off support, selling off resistance, kind of going back and forth, creating that dead space. Okay. So as a market starts to evolve, either the existing trend is going to continue, okay, where price will close inside of this candle. We still got about 40 minutes left. If it does, then we're looking for a small retracement back up on a smaller time frame to splice into a continuation of the existing trend. Okay. A lot of good things have come out over the last couple of weeks as we've been noticing different things on the chart. And as we look at each chart, we start to see different fractals. Um, on the NASDAQ, okay, I went out to a 90-minute chart to see the same basic chart pattern. Okay, we got the markup, the accumulation, the spring, and these things can be exaggerated. They're not always symmetrical. Okay. And then we had the selling point. It acts like a map. Okay. But sometimes if you get stuck just using small time frames, you can get lost in the weeds. Okay. This was kind of my notes to myself as I was trading the NASDAQ yesterday. And I noticed the time-based charts were much more distorted, more difficult to read than the tick chart. Okay. Find the right picture. Find that right picture. Okay. All right. Let's go back to crude oil. Okay, we're about 10 minutes. How would you guys like to do the first giveaway? Okay. Let's do a quick question on this. And we can come back and kind of use one of these charts as a reference. Okay. So the fastest one to answer the question, so get your fingers on the keyboard. There's not a trade right now. Okay. There's an opportunity to get a free $50,000 evaluation account. Okay. Make sure you understand the rules. Jump onto the Elite Trader funding and step in and start getting a couple of these accounts going. So when you have market conditions that are not right, or you may not feel right, you can test things out using the Elite Trader funding proprietary trading account to get past the evaluation. Now, all you have to do with a $50,000 account is make 1,500 bucks in order to get up to the next level where you can get a funded simulated account. That's where you start getting paid. Okay. So it's a really great opportunity to switch between your live accounts and your proprietary accounts because you treat them a little differently. Okay. And one of the things that I just noticed out in was kind of monitoring several of these proprietary trading firms is some of the owners of these proprietary trading firms are coming out and giving you some really nice trading tips. Okay. one of the things that I noticed is that they took, he said, start off with like what we're going to do here in just a moment. I'm going to give you a giveaway is get your account past the evaluation, get into the funded account, make the money, start taking the minimum payouts, okay, and start refunding another evaluation and get several of them going. Okay. Use the money from the prop accounts in order to create more prop accounts. Okay. And then once you get up to a level where you're comfortable, then you have multiple accounts to make money for you. Okay. Anyways, so the first question that I'm going to ask for the first $50,000 account giveaway, let's see. If you spot a long wick on top of a red candle, what could that mean? Okay. Long wick on top of a red candle. Okay. Buyers tried to push the price up, but sellers took control. That's A. The market just woke up. B. C. A new moon is coming. Or D. It's time to buy because it looks fancy. All right. So let's go over the question. Oh, look, AS, man, he's fast. All right. We're going to have to get you faster, bro. All right. So the team will take care of you. And we'll have the next question. And the correct answer was A. The long week means buyers pushed it up, but the sellers took control. Possible reversal and weakness. Great job, everybody. We have two more of those questions to come up a little bit later in the session as we start looking for our trade opportunities. And as you can see, the markets have not been giving us a lot of great trade setups this morning after the impulse move that we had to the downside on the equity indexes. I still have the British pound short as the market session starts to open. And let's take a quick look over at the dollar. Dollar just got one red candle on the hourly chart, but it's still pushing higher. Okay, so as long as the dollar is pushing higher, we will expect the Swiss franc to come down to demand, Japanese yen to come to demand, and British pound coming back down to demand. Okay. One of the wheat charts, chart on wheat, we did find a buy territory, a big range there. We do have a fair value gap as markets started to change momentum and start pushing up. Looking for a long opportunity around that 498 and 5/8, stop loss 496. Okay. Bean oil, a lot of things going on with soybeans, soybean oil, soybean meal. Now, this time of year, soybean meal becomes a big part for cattle farmers. Okay. Cattle farmers. So prices may start to rise or drop because, I mean, we're getting a lot of supply from soybeans because China's not taking the other side of the trade at this point. Okay. So there might be some supply and demand issues going on, and watch for volatility around the soybean oil, soybean meal type products. Okay. And I did have a potential with that strong price movement down. I was looking for a break below this low. Look at, we have on this particular chart, we have that dead space where there are many orders have been filled, and we expect if price dips into that area, it should easily go through down to that demand. Okay. So let's move on. The other thing I noticed about the 30-year, the 10-year, and the 5-year bonds and notes is we've got a pretty substantial price drop today. Okay. And we're looking for the opportunity that price may pull back to demand. As the US dollar 10 and the 2-year yield continue to move up, we have to anticipate that these will move down to find demand. Russell has already hit, looks like a fair value gap supply. And we are waiting for the Dow, S&P, and the NASDAQ to pull back to demand. These levels we have marked. So right after the session open, about 3 minutes, I'm looking for the long opportunity, or at least price coming back down, 66.14 area, 65.89. Okay. Take the time, reduce the time frame. Okay. Understand what is the overall trend of this time frame so you can stay on the side of the trend. We've made lower highs and lower lows. Okay. Now, price has not come up into a supply, and we would not look to take a trade short out of the dead space. It may look really nice, okay, but it has a very high probability of not working in your favor, taking too much risk. 4 Dow stocks negative over 94 cents and 6 positive. That leaves us with 2. Okay, as we can see, S&P futures are becoming oversold at this point relative to the cash market. All right, let's move on. NASDAQ, we're also looking for the pullback. Looking to see if there's buying opportunity here. Now, keep in mind, what we noticed from the prior session's high to the Globex low is this was an impulse move. This swing in price exceeded the daily ATR, okay? And when that happens, you have that impulse and then you go into correction. So what we're looking for today is basically price to be more range bound, okay? So it does look like we have a leg base right here. Okay, let's turn it off the video to free up some resources here. I'm just waiting for my computer to catch up. Okay, hold on 1 second. Oh, there we go. Start catch up. All right, now here comes NASDAQ coming back down to demand. There was a leg base up in here to take that move down. I just want to go out to the smaller time frame. Also notice the NQ. That was the second time price tested the 50 simple moving average on a daily chart. Okay. Price closing below the 50 moving average on the daily chart is going to be very bearish for the overall markets. Okay. Okay, so things are quiet on the equity indexes. So I'm just kind of going through and checking them. There's no real trade opportunity yet as far as getting into demand or supply. And let's come back up to crude oil. Okay, crude oil, we're looking for price to hold the lows as we start doing contract rollover today. Traders are going out of the November contract and then going into the December contract. The volume is already shifted. Okay, so Monday I will be on the December contract. Today I'm still looking to trade the November. Let's look for that opportunity on crude oil as price comes down 56.85 to 56.62. We'll have that range. I'm going to set this one up ahead of time, 56.85, keeping my contract size smaller. If we had a narrow overnight range, a tight range, okay, I would be looking to be a little more aggressive and staying in a trade longer. But since we had an impulse move yesterday, I'm going to look to be less aggressive as far as my position size, and I'm going to keep it thing right around 2 micro contracts on this. Setting this trade up on crude oil, 56.85 will be my limit order, placing that. And then I'll have my stop loss at 56.62. Now, let me just put it at the low of the session, okay? Now, this is a different trading environment that we're looking at. We're not looking for just a big running trend. We're looking for some trade opportunities here. And let's see, gotta make a quick little adjustment for the Globex range. Important to document the Globex range. Compare it to the daily ATR, okay? We got 14, almost 15 cents on the daily ATR, and we have 6 cents. So we're right in the middle. What that simply tells us is that if the Globex range compared to the daily ATR is right around that 40 to 70% range, Globex compared to the daily ATR, is that we expect a lot more choppier conditions. These are things that we've observed and have put together over time and have incorporated into our trading plan. I'm looking for an opportunity on gold to take a trade short. One of the things we also monitor is how many up days in a row before we expect a down day, okay? And they usually happen in Fibonacci numbers. 2s, 3s, 5 is common to get the 6 candle being on daily candle to be down. If 6 becomes positive, we look for 8. 8 is rare. And then if we have 9 up days in a row, we expect 13, which is extremely rare. Okay. So an opportunity on gold is price retracing back up and looking for that area of 43.63, 43.68 as a potential place for a short opportunity, unless another one sets up. Okay, this is not something I'm going to hold a long time because we have no market structure supporting a downtrend. Okay, it's a counter trend trade at this point. Okay, bringing us out to the exchange traded funds, no major gap up or gap downs on this, and we can see the Qs, the SPY Diamond, and the Russell are fairly quiet. Okay. Now, what would make me more bullish, and I'm leaning more on the Dow and IWM, is be willing to look at that potential of that candle range theory. Okay, so we're still the 240-minute chart. We still have a little bit of time for the current candle to close inside the body. Then we would look for the opportunity to buy on a little pullback to continue to move up. Okay, Dow is also showing some signs that once this candle completes inside the body, we'll look for price to give us a little pullback, and we can see the continuation of the price moving up. Like we said earlier, today is more of the correction day where things might be a little bit more choppy, okay? And we just need to be prepared for that market action, be patient, and willing to wait for the trades, okay? Let's see, our British pound is still working out pretty well, and we do have a trade we took yesterday off the wheat. Let's bring that one up. Yeah, there was another fair value gap over here that we got in. That was our first one. WZ25, the December wheat is what we're trading. And we can still see that we're doing well. Okay, there's really no obstacles as price continues to move up. There's another opportunity to go long right around that 44.98 area. Okay, as we mentioned before in all of our picks. Okay. All right, so let's dig out here. We still got about 22 minutes to see if we're going to get price closing inside of that, where we could then look for a little consolidation and continuation of this down move, impulse and correction. Okay. As we mentioned earlier as well, price moving up into this range may continue to go through it. Okay. But supply zones and demand zones on the equity indexes going into this area, okay, they often fail. So whatever the direction is going into it, we're going to anticipate it's going to continue to go through. Now, that doesn't mean I have a trade, okay? Just means I have a direction based on the evidence that we see on the chart, okay? So dropping down to the small time frame, if I'm looking for price to go higher, how would I get into this trade? Well, demand zone or a fresh fair value gap to splice in to the trend. Okay. Now you also have to ask, is there a place where we could look to go short? Okay. Back down to those levels. And right now, we're right at resistance on the small time frame. We do have that speed bump that we talk about right above it and a fair value gap. Okay. But let me remind you, this zone and fair value gap is inside the dead space. Means much more higher risk to participate at that point. Now, you may find that that risk fits your trading plan, or you may say, you know what, I've experienced that enough times where it's failed that it's not really necessarily a good way to take a trade. Okay. So the choice is yours. The picture is a speed bump, and we have fair value gap, leg base, all indications right around in here that we could get price getting a small breakout inside that dead space. Okay. Remember, I just want to remind you about that. But we could look for a short-term counter trend trade on that. Okay. Kind of what we often refer to as a little fake out breakout. Now, on a higher time frame, S&P, what would that fake out breakout look like? Okay. Well, we have a leg and we're building a base candle. We still have 19 minutes left for this base candle to close inside the body. If it does, then this is going to be where we see sell side liquidity. Okay. And when we have that sell side liquidity, then price bouncing back up to the area we were just talking about on the S&P will be a good opportunity to take a small position and look for the expanded range candle back down. Okay. Very similar to what we saw up on the tops as well as what we're seeing on the bottoms. Okay. NASDAQ is coming back inside. We still have 19 minutes away before price closes. Candle number 1, candle number 2 must complete in order for you to have the information. Upon candle number 3, we'll look for price to go back up into supply on a small time frame, which is what we're going to do here on the S&P. Mark these areas between 662 and 6701. Okay. Now this trade gets active, or the potential of this trade becomes active if on our high time frame price closes inside that body. Okay. The one we were just looking at was the S&P. Let's get the NASDAQ set up and ready for this as well. So NASDAQ has a resistance, multiple touches on the left, and low pivot point is on the right. Okay. This combination of where price hits resistance and where the low pivot point often shows that there's an area just above resistance, that trap. Okay. We can identify a leg base group of candles right in that range. Using that leg base group of candles and the experience of looking at the market structure for a buy territory, where the multiple touches are on the left, low pivot point is on the right, we often see that there is that what we call a little fake out breakout. Okay. And inside of that range, we can look for that little fair value gap. Okay. So again, Back to the large time frame. We got 17 minutes to wait for this, and this is why I put the time remaining in the bar. Okay, helps me manage expectations. If this candle number 2 closes inside the body, then the areas we just marked on the S&P, 6682, 6701, this will be a place where I anticipate price to shoot up and an opportunity to take a short trade. Okay. Now, if you understand more about the fair value gaps and how to those work, when price enters a supply zone or demand zone, you can look for that big red candle to the downside. Okay. Seeing price reject. Okay. On a higher time frame, it would be just like the question we just asked. You know, what happens when you have that big red candle or that big tail on top of a red candle? Okay. Buyers came in, sellers took over. Okay, which is what we're starting to see at this point. All right, let's get ready for the Dow. Now the Dow and the Russell have a slight different picture. Let's drop down to the small time frame. Looks like we've already tested that on the Dow as far as the leg base group of candles. Price dipped right in it. That's what we're expecting on the S&P and the NASDAQ if we get a pop to the upside. We have no economic reports coming out, so it's going to be about who is speaking and any tweets out there. Okay. We have the resistance area, price broke above, little fake out breakout. And now, conservatively, we're looking for price to come back down to the origin of the strong move up, where we have a leg base. Multiple touches on the left-hand side of the chart with the resistance. Okay. Price taking out those sellers. Often when we make that lower low before price takes them out, we'll look for price to a demand zone in the lower 2/3 of the buy territory. Potentially, we're looking for that reversal. Okay. Now, I'm giving you a lot of information, but as you see, there's not a lot of places to take a trade at the moment. If the momentum is going to pick up, we still got 5 minutes. Let's see. And going down to that, how do you splice in to this? Okay. See, we got price rejection off of that speed bump area. When we look down in the left, we can see that there's a nice pocket of points right here. Easy price movement, very low volume in that area. Okay. But how are we going to get into it? We're going to use a fair value gap technique. Okay. Now I still need to wait for the candles to complete. Okay. Especially this green candle right here. We need to see if there's going to be a fair value gap. But we can assess where we would put the risk on the trade. Okay. Stop loss. Once this candle completes and retest that 46,194, we will enter the trade short. I will be sticking with one contract. And the higher this goes, just go wick to wick. Okay. Let's see, we got 5 minutes. Let's turn that. Let's see if I have that study on here. There we go. Okay, still got 3 minutes. How are we doing on a higher time frame? Okay, things are looking good. Okay. See, as we're calmly watching the potential trade setups here, is that we're now becoming prepared. If this candle in the next 12 minutes closes inside the green body on NASDAQ, Russell, and S&P, it's already there, but we still need the Dow to come into play. If it closes in there, then the move back up into the sell side liquidity, okay, we want to be able to take trades short, okay? And that's what we're scouting out right now. Russell. Large time frame, we do have buying down below. Nice strong resistance. So now we have the picture of what we're looking for is price to come down to demand. But in order for it to come down to demand, we may have a trade opportunity to take it down to demand and then take it back up. Okay. Everything on the price chart we can watch and observe. We can look back to the left and we can take time to verify a lot of this information as well. Okay. Crude oil. Markets are choppy. Okay. Still nothing done on crude oil. Natural gas. Natural gas is coming off of a daily zone that we had marked. Okay. But the way that it opened, I'm expecting a lot more choppier conditions. So I'm staying away from that gas at the moment. We did see price almost found a leg base. Looking for the bounce back up for the opportunity to take a short trade off of that. Okay. We're expecting an overall down day on gold. Okay. Today is the 6th day after 5 up days in a row. Okay. Let's drop down to smaller time frame. Let's see what we got on the 10-minute. Yeah, I'm going to be waiting a little bit. Now, what led us into a lot of this? We recognized, as I would been describing in the pre-market, we're going to be waiting a little bit for our trades this morning. Do you remember what we talked about as far as why we expected that? Anybody remember? Because yesterday's price range was a correction or an impulse? That wasn't one of the giveaway questions, but being aware of how the markets move. Okay. If we're going to go down and find demand, okay, well, if price is going to come to demand, it must go down. And in order for it to go down with any commitment to it, it must form a price pattern. Okay. The fair value gap strategy works very well when markets are trending or in momentum. Okay. Just double checking a couple of things over here. You have the 10 and the 2-year yield are pushing back up as we see the dollar pushing up just a little bit. So I'm still okay with my British pound. All right, there we go. S&P futures are flat at the moment. We have, let's see, 13 Dow stocks up over 94, 14 Dow stocks up, 3 down, 4 down. So that leaves us 10 times 2 is positive 20. Right now, S&P futures are oversold by about 20 points relative to the cash market. Okay. The Dow 30 stocks are a price weighted index. A price-weighted index is different from market capitalization-weighted index. S&P, NASDAQ, Russell are market capitalization-weighted index, simply meaning the larger market cap stocks move the index more than the smaller market cap. Okay. And a price-weighted index, everything has an equal weight in concept. Okay. And we can take the number of Dow stocks that are greater than 94 cents positive versus the negative, and we net the results. When you take those results and multiply them by 2, it gives the value of cash. And futures are going to be viewed as trading at a premium above, expensive, or they're going to be trading at a discount as price hits demand. Okay. And we look to use that as an odds enhancer. Right now, using or seeing that S&P futures are oversold relative to cash, we will see that when price comes up to our supply zone up here, that cash and futures are going to be somewhat balanced. Okay. That means if we choose to take this trade, we're going to need to keep our position size small and anticipate a little more higher risk. Okay. Now, all these things that I am mentioning are part of our pre-market routine course, okay, which you can find on our website. So I'm going to set this trade up on the S&P. Okay. I understand that it is elevated risk. I'm going to set a limit order to sell short. Now, part of the reason for the timing of this is we're 6 minutes away from the 10 o'clock reversal. Okay. Oh, the 10 o'clock reversal, 85% of the time, plus or minus a couple of minutes, the market changes direction at 10 a.m. Eastern. And we're seeing the prices going up. So what would be the opposite of this price moving up? At 10 a.m. in 6 minutes. Okay. So let's set this trade up. I'm keeping my position size to 2 micros, mainly in this session here. It's not about how much money you make. It's about checking out, does this guy help me make trades? Does the information that we're sharing, does it help you assess market conditions? Okay. Does it help you follow a trade plan? Okay. And do you think you can utilize it? Okay. All right. So let's see, 66.84. We're getting close. Selling 2 micros. Stop loss will be at 701. And we're good to go. So my narration, I guess you could say, or commentary as we started lining up the trades were all based off of what we did in the pre-market. Okay, what information did we gather to make that? What picture on the price chart helps us execute the trade? Okay, utilizing the timing of the markets, understanding demand is much lower and supply is much higher and we're also going into that dead space. Now, I did caution you already, okay, that taking a short trade inside of this dead space is a more elevated risk, okay? This is why I'm keeping my position size smaller, okay? I'm not looking for a big price move, only a price movement back down to 66.14. I don't think the market's going to fall out of bed, okay? We don't have any clues for that. What we do have a clue is that we had an impulse, and today's market range is most likely going to be choppy. The other thing that I'll put out there is that on the S&P and the NASDAQ is that in the pre-market, where did I put it here? Indexes with their Globex range has exceeded the daily ATR. So the overnight trading range on the S&P and the NASDAQ in particular exceeded the daily price movement. We call that ATR, average true range. When that happens, we are prepared for a strategy called the bull trap or the bear trap. Oh, how much did it miss me? One tick. Oh, you guys are jumping in front of me again. I guess it did say half. All right, I'm going to leave it out there, but wow, one tick. NASDAQ, same thing here. We still got about 2 minutes. Now see what happened here. It doesn't appear that we're going to be basing here. So now we're going to have to wait a little bit longer. Okay. Russell's the closest one, but we only have a minute to get back into that candle range. Okay. Dow went deep. Anybody get the S&P or the NASDAQ on a short-term pullback? Man, that would have been a beautiful trade. Look at that entry. Missed it by that much. Now I can wait a couple of minutes, and if we do form a new fair value gap, because this is the target we're looking for. This is where we anticipate buyers to be to the downside, or on the downside. Okay. There may be another opportunity where we can get into this. Right now, we just had the initial reaction, a little fake out, breakout. Price popped up, found our zone, and is pulling back. If these techniques are something you think you want to learn, please reach out to us at the marketinstitution.com. Okay, let us know. And on that note, what else do we have? We got British pound. All right, British pound is coming down. Let's see what the other ones are. Looking for wheat, pulling back a little bit. And we're still waiting for buyers to come in on British pound, Japanese yen, Swiss franc. Wow, big price movement on the 5, 10, 30-year bonds and notes. Now, if the SPY is going to move back to the upside, okay, we're going to need to see this green candle close inside, and this is on a 240-minute chart. Okay. Boy, that was a nice move. 84. I mean, that's a 24-point move down off of that. All right, let's do another giveaway. Are you ready, Ro? Give me a thumbs up. See if you can be the fastest one to answer the question. All right, question number 2. Trader, question number 2 is about discipline. Okay, helping you out with this one. What's the trader's version of counting sheep? Counting pips till they fall asleep. A. Counting losses until they cry. B. C. Watching charts at 3 a.m. just one more time. Or D. Backtesting their setups calmly before bed. So what is the trader's version of counting sheep? Okay, A, counting pips. Oh, Ro got D. Okay, D is the correct answer. Okay, good job, Ro. And the team will reach out to you just throughout the session here. Okay, so let's come back and start looking around. Yeah, this is the tricky spot. A lot of the candle range theory coincides with what we look at for the leg base group of candles. Leg in, base, leg out, base. Kind of marks the range of where we have a demand zone or supply zone. Okay. Now we know by using the leg base method and approach for identifying zones is that you can have multiple base candles between the leg in and the leg out. Okay. But that just means that price is going to go sideways a little bit more. So we're seeing Russell, we got a base candle. We still have to wait for price to close inside of that at 24.66. Then we have a place to splice into that bullish move. Okay. Okay, a short-term little trade. That NASDAQ. Okay, so let's also take notice of our market internals. The market internals that we have here, the trend, which is the short-term traders index, also referred to as the ARMS index, developed by Richard Arms. Uh, 19, I think I want to say 1960s or 1970s in that time period. Okay. Now, simply watching this is when the trend is low, below 60, and markets are ascending. This is often a good visual of selling in to a rally. If the trend is above 2 and the markets are descending, this is a good indication that big players are buying in to the drop. Excuse me, the drop. Okay. So trend high, time to buy, trend low, time to go. In the middle, it's like an inside day, it's choppy. Okay. Consolidation. Looking at where those extremes happen. Volatility index just tells us kind of the fear gauge. The higher the VIX, the more insurance is being taken out to hedge against market volatility. The tick is a NASDAQ or New York Stock Exchange, in this case, is the tick. This is the composite, not just an index. And what are we seeing? Well, we didn't see a buy program or a sell program or a buy program kick in at the open. In fact, we're just going back and forth right here. So we got equal number of upticks and downticks. Okay. No extreme. When the markets get to the extreme levels, we can then anticipate. Hey, Harvey. Um, I just took the 120-minute chart, and Harvey's saying, well, why are you looking at just 120-minute chart? Okay. Well, when we're looking at multiple time frames, if I'm using a 240-minute chart, then I'm going to reference more of a 30-minute chart to splice into the move. 120-minute chart is basically taking the last 2-hour candles. Okay. You can go smaller, but the smaller you go, as we drop down to, let's just go 60-minute, as we use the same technique. Okay. But when you use the high time frame, or sorry, the high time frame, which is what we're using on the CRT, is if I drop down to 60-minute chart, then I'm going to have to either look at tick charts or 1 to 3 minute candles to splice into the move. Okay. So kind of keeping things as a happy medium, I went to the 120-minute chart to give us all enough time to evaluate the markets and anticipate the price moves. Okay. So it's just a trading style. And you could go down to a 30-minute chart, and I've done this in the overnight session, is if I go to a 30-minute chart for the candle range theory to play out or give me a clue, I had to drop down to tick charts in order to participate. So this is a higher time frame to help me understand market structure, whether we're in an uptrend or downtrend overall. And it's to alert me that after an impulse, we look for a correction and then either a reversal, rally base drop, or a drop base rally. Okay. So it becomes a choice. How small of a time frame do you want to trade? Reference your high time frame and where you got the information, either to go long or short. Okay. And then on your trading time frame, kind of correlate that. Now, what I am, let's see, let me bring that up here. As a reference, and I'm still verifying this information. Okay. So if I'm using a 15-minute CRT, candle range theory, then I'll use 1 minute. Now, these are all time-based. For me, I've seen that once I start getting below an hour, I need to start looking at the tick charts to get a little bit more clarity. Okay. So we're always expanding and contracting or to find a trade opportunity. Okay. So a 2 hour chart gives me some opportunities where I can trade with the students and in front of the students to help go through how we would evaluate entering the trade. Okay. And that the big reason for the time frames that I do use is mainly so it gives everybody enough time to evaluate, test it out, see if that trade is going to be for them. Okay. Great question, by the way, and thank you. Good to see you. Okay, so coming out to Russell, I just altered the time frame to get the right picture. I went up to 180-minute chart, okay, to isolate that leg candle. Now, I've been really exploring getting the right picture before I choose to engage in going long or short, okay? Right now, the Russell is looking like the trade is if it closes, and I still got about an hour and 50 minutes for this strategy, okay? For it to close inside. S&P, okay, still the same amount of time. Yeah, let me just adjust here. So I'm trying to find the right picture on the high time frame to make me more aware of what to do on the smaller time frame. Okay. We're always understanding that when we're looking for leg in, base, and leg out, okay, the leg candles, body greater than 50% of the range versus a base candle where the body is less than 50% of the range. Can usually when that body is a base candle, the markets are choppy, going sideways. So if we return to the 120-minute chart and look at them, okay, the higher time frame, which we can glance at very quickly, is producing base candles. When price is producing these base candles on the high time frame, what are the small time frames doing? Choppy. Okay. So it's a real quick reference, and you can decide which time frame fits your trading style. Okay. But I really like the way that this candle range theory has been, it portrays itself And I believe the company that put out a lot of this information was the ICT Concepts, well, Inner Circle Trading Concepts. So ICT. Do your research on them. A lot of their concepts coincide exactly with what we witnessed with the way that these patterns work. So if on a larger time frame, we're looking up here in this corner here, where we have the markup, buying climax, the spring and a sign of weakness, or in their terminology, accumulation, manipulation, distribution. Now imagine what this would look like. The markup would be the big green candle in this case. The buying climax or accumulation would be the base candles. Okay, so candle number one, candle number two, and then candle number three, where you get some of that volatility. And then as candle number three starts to manifest and candle number four in that sequence, you can kind of see what's happening inside of all of that. Okay. Uh-oh. Looks like we might have got on the S&P. Okay. What time? Oh, right on the quarter hour. Okay. Just rechecking the news. Okay. Remember what we were talking about earlier? This becomes a higher risk trade to short in this range because of what we're looking at here in the dead space. All the orders have been filled in this range. So taking a short trade in here in this range is elevated risk, no matter what type of candle patterns you have. Okay, it's just elevated risk. Okay, let's see if futures are overbought at this point. S&P futures are up 23 points. We have 5 Dow stocks that are negative over 94 cents. And we have 14 that are positive. So 9 times 2 is 18. So yeah, S&P futures are becoming overbought relative to cash. Okay. See, I'm letting this trade just with 2 micros. I am on the simulated account because of the market environment. Okay. I chose to take extra risk on that trade, managing my risk by having a protective stop loss. But the conditions outside of this were telling us that the risk was elevated to participate in that trade. Okay. And the way that we got that information was understanding where that dead space is. Okay. We should anticipate easy price movement. Okay. So maybe we'll get a small pullback before I get stopped out and I can get out of the trade. So if you calmly approach the markets, doing your pre-market routine and putting the information together, you'll know which trades are more elevated risk. You'll also know which market conditions can be more elevated risk. Okay. And that's when price is traveling through these areas. Okay. The area up above, right near the prior session's high, is outside of that range and can give us some opportunities. Let's see if there's any zone up there. Now we do have a little we have a sell territory up here. That is way up on top. Okay. So let's talk about trade management. When that one almost stopped us out, what were you feeling? Oh crap, it's happening again. If you felt that, you now have a much smaller loss on this, okay? Make the tough choice. If you didn't like it going against you, if you almost panicked out, you're not ready for this trade, okay? My charts are having. So now we got a little bit of a profit. That doesn't mean this trade is valid, okay? I'm going to close the trade because I understand that I kind of did a slop shot.
Order
Okay.
filled.
I feel lucky that I'm able to get out at a break even or made a slight profit, okay? I still had that risk. I'll have another opportunity to get into this trade going to the downside, providing another setup comes into play. One of the things I learned from Zig Ziglar back in the day is he always had this saying, if you got to eat a frog, you don't stare at that sucker too long. Okay? That was a frog. Price went through our zones. If you want to differentiate, were you lucky or were you good? Okay, understanding you didn't have to panic out, you had your maximum loss in place. Okay, which was roughly about $165 in this trade. Okay, by assessing what your potential risk is on the trade, if you accepted that risk and then the trade got turned around, okay, or violated your area, but gave you a chance to get out at break even, you need to take it. Okay. Some of you are going to try to hold on and say, oh, I made so much money. But you know what? The risk is elevated on this. Okay. We don't have any commitment. And by our own observations, when price gets into this dead space area, it does tend to go through. Okay. We are expecting short-term trade opportunities today because of the prior impulse. And then we're looking for more of a choppier market condition. Okay. NASDAQ would have experienced the same thing. We would have entered the trade, potentially just got stopped out. Okay. And now price dips back on us. Okay. What set that scenario up? Well, look at the higher time frame and say, oh, it was in that dead space. Okay. Taking trades in that dead space. How do we qualify a dead space? Minimum 3 touches of support, 3 touches of resistance, isolating that area to where you can see that if price goes in there, that most of the orders have been filled in that range. Okay. Not a place to take a trade. Often we see when price returns that we can get a little bounce, but look at that sweeping move right through that dead space up here. Okay. Understanding those conditions can allow you to help understand and manage your risk according to your trade plan when those conditions are around. Okay. We still have an opportunity outside of that dead space to take a trade short. Should the NASDAQ get up to 25,041, 25,081. We have an opportunity to go long once price returns back to 24,573. Now I know, and if I was in a classroom right now watching this go on, I would say, oh, my stomach would start to turn and say, well, yeah, but I want to make a trade right now. I get it. And we're looking for one, but we're looking for the right market conditions to keep our risk lower. Okay. See, when we started off this session, we were talking a lot about the different market conditions. What condition do we expect today? What was the information that happened in the Asian London session that's bringing into the New York session? Okay. We might even look yesterday and say, hey, what was the London and New York session price pattern that played out in the Asian session? Okay. Or what was the New York and Asian session that tells us how the London session is going to play out. Okay. A lot of really cool information about that. And when you start looking at the picture a little differently, and I did find, let's see that trading view. Bringing up trading view, there was an indicator and it's called trading sessions. Okay. So the indicator does the work for us to isolate the different trading sessions. And what you want to start doing is combining, whether it's the Asian and London, okay, or London and New York, because these are where we see some of those price patterns come into play. Okay. Of course, it's a little larger time frame. You got a smaller one. But the whole purpose of knowing what the Asian and the London session is to anticipate what the New York session should become. Okay. So kind of cool stuff. I mean, there's a lot of things out there that all of it and everything that I'm sharing here is designed to help train the eyes. Okay. And crude oil slowly making its way down. That gas still very choppy. We knew it was going to be very choppy by taking measurements of the Globex range, comparing that to the daily ATR, and generally when we open between about a 40 and 70% Globex range compared to the daily ATR, we have these type of conditions. Choppy. Okay. If we have a narrow Globex range, say 40% or less Globex range compared to the daily ATR, then we have that small channel and we can expect a market manipulation and then a trend to be established. Okay. If we have a wide Globex range, then we're going to anticipate the bear trap and the bull trap. So the S&P had the bear trap and bull trap scenario in place. Okay. And price dipped up, pulled out. The bull trap worked. Okay. But that bull trap was in the wrong location for us to have a good trade back down. Are you guys finding this helpful? I don't know, some traders just want to get in there and make trades, but when there's no trades to be made or very few, we have to exercise patience. Exercising patience, sometimes mean we have to wait. Okay. And during those waiting times, better than me just snoring on the screen here and kind of kicking back, waiting for an alert to go off. Okay. We take the opportunity to do a little teaching, little education on this. Okay. Right now, the Russell is looking the weakest out of these. Okay. We still have time for this candle to close. Okay. But let's take a quick look at the Russell and see what we could anticipate. Small time frame, 5-minute chart. Just a lot of back and forth at this point. Demand down below, supply up above. Okay. IWM is channeling sideways. Now, the importance of when the market channels sideways is these particular price patterns. As I've been sharing over the last couple of days, the things that stand out to me on these price patterns, okay, and then help me assess what I want to do, okay. What stands out and what's easy to see, somewhat easy to see when it's forming, is the sideways choppy markets. What alerts me to the sideways choppy markets getting ready to form is the prior session's range, whether we had a big move up, okay, expanded range candle, okay, then we go into a sideways, but we have basing candles, okay, then what should I expect after the basing candle? A pop back to the upside, sign of weakness, and then look for the sell point. These maps were drawn and put in place by a gentleman named Richard Wyckoff. This is a Wyckoff method of trading. You can include some of the other pieces that Wyckoff uses with volume and some other different odds enhancers. I'm not going to start teaching that right now, but the map is there. Okay. When do we expect and what am I looking at? So when I start seeing markets going sideways like this, and I want 3 touches on top, 3 touches on bottom to specifically qualify. And if I'm looking down below, I can see right now that the IWM has 3 touches on the top, and I can connect 3 touches. So that becomes a dead space. Okay. So what we're expecting after this is I need to see what happened before it. Oh, it was a move down. Okay, so which one of the maps are we looking at? Okay, well, we've had this, and now we're looking at this. All right, so what we could anticipate would be price dipping down, popping back up, and then looking for that potential reversal. These bases are formed as where sellers or buyers are accumulating, okay? And they can help you visualize. Now, we're looking at the IWM and we're expecting price to do that spring to the downside. You may find a way to splice into that short-term down move, or you might be looking, all right, below this area over to the left, where do I find demand? And you might find it right near the 50-day moving average on a higher time frame. Pretty cool things, okay? And, trading is so much about pictures. Now, I know Harvey's in here, and Harvey does a lot with Fibonacci retracements and extensions. They all play their part, okay? But how we learn about these price patterns and shapes and stuff is, for me, Fibonacci measurements were a very big part of understanding these pictures, okay? I needed to see that they were not random, okay? Now, if the IWM does come down below that range, then this becomes that pivotal point, the spring, okay? Quite cool. And now we know that, hey, you know what? If the indexes are doing this sideways choppy stuff, then our futures on the indexes are going to be doing that sideways choppy stuff, okay? And we need to get price outside of that range. All right, let's do a final question. We got, let's see, our third question for a $50,000 account giveaway. Are you guys ready? Compliments of Elite Trader Funding. Question number 3, as we wrap up here today. It's about market personality. When the markets move up or down fast, what do traders usually call that? A calm, relaxing session. B, consolidation or paradise. C, whipsaw and madness. D, a guaranteed profit zone. A calm, relaxing session. B, consolidation. C, whipsaw. D, guaranteed profit zone. Type your answers fast. This is our last giveaway today. Okay. Now, if you, let's see, please check your email, everybody, for an email from admin@themarketinstitution.com so you can claim your accounts. Okay. There wasn't a lot of trades we took today, but hopefully I explained why. Okay. Now, some traders can do really well in these type of markets by taking short-term trades. Okay, kind of like what we did here. We were able to get out with a small profit, but as we are watching, we're still seeing that there was no really impending strong trade opportunities. We're going to be waiting for things to happen. Okay. So great energy today, traders. Thanks for letting me share some knowledge with you. Hopefully you find it useful. Every session is a lesson, and every lesson adds to your edge. Stay patient, stay consistent, and trade smart. If you haven't yet, hit the like button, subscribe, and join us again tomorrow for another live session or on Monday. Okay? Trade safe, everybody. And I'll be hanging out in the Discord room later. And thank you, team, so much for all the work you've done behind the scenes. Okay? Have a great trading day, everybody. And we'll see you on Monday.